Hello Crypto Cats, my name is Tom and I'm the crypto investor, and it's time for a bit of a mid-week chatter, and I wanted to talk about this. So Goldman Sachs Files for DeFi ETF. Well, on first sight you think, well, fantastic, we haven't even got a Bitcoin ETF and you're hitting us with a DeFi ETF? Hot diggity damn. Well, cool your boots, man. This is not quite as good as it looks. So it says that the fund is going to have 80% of its assets in companies, stocks in companies that are advancing blockchain technologies and the digitization of finance. Great. Okay, cool. That's going to be, payment processors, and of course it's going to have Coinbase and MicroStrategies, because at the moment they're the public companies that have the highest highest weighting towards crypto. Well, let's take a little look into that fund, shall we? And whilst we're doing that, by the way, if you do get any value from my videos, please do smash the like button, please do subscribe, hit the alert button, that's the one, get the alert button, and tell your mates. So let's look at this fund that they're putting out here. All right, here are the companies. Wow, highest weighting is Nokia. What the fuck? Are they trolling us? Nokia. Okay, but wait a minute, there's no Coinbase, there's no MicroStrategies. This is not DeFi. This is a lie. This is D-lie. This is ridiculous. Okay, Facebook's in there. I can sort of see that. They are looking at positioning themselves as a metaverse company over the coming decade, which is something really cool to look into. I mean, not cool. I absolutely hate the centralized way that they would do that, but it's interesting that they're taking that approach because they know how big the metaverse is going to be. Hopefully we're going to have a decentralized metaverse version that wins. Anyway, let's not talk about metaverses for now. But anyway, as you can see, that this is basically, this is Goldman Sachs trolling us. This is not DeFi one bit, and to be honest, it's disingenuous and frankly criminal that they can hoodwink investors to think that they would have exposure to DeFi when in no way whatsoever is this going to have a strong correlation to DeFi. DeFi could 50x and this could go up 10%. It's outrageous, to be honest. So if anyone comes to you saying, hey, I'm investing in DeFi on this ETF, tell them off. And tell them to look at the DPI Index. So if you're not familiar with the DPI Index, this is from Index Corp, and this is the DeFi Pulse, ticker DPI. And this does give you a weighting. It's like an ETF in DeFi. You can see here are the top holdings. Uniswap is 23% of this fund, Aave 21%. We've got MakerDAO, Compound, Sushi, Synthetics, Yuan Finance, yada, 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 yada. You get the idea. But this is the best way you can get your exposure to DeFi. Also, I mentioned it on my weekend video. If you're not familiar with it, check out the bankless BED index. So if this is awesome. If you just buy one coin and you want to have minimum involvement in crypto, you don't want any of the stress, you just want a dollar cost average into something you can set and leave, this is the option to use. So this is 1/3 Bitcoin, 1/3 Ethereum, and 1/3 DPI Index, what we just showed you. So this gives you a broad exposure in all areas crypto, and it may seem conservative and unadventurous. It's not, and I promise you that this will outperform most portfolios. It's decent, and this if you just want to have something really passive, really simple, or you have friends who want to get in the crypto space, point them in this direction. So right now you can't get this on any exchanges. You have to, of course, have your money in MetaMask and then go to Uniswap. And if people are not comfortable with that, maybe I can do a video walkthrough on how to do that. But this is really cool from Bankless, the the BED index. So yeah, put your money in bed and sleep well. All right, should we have a quick look at the charts? Oh, first of all, I wanted to give you some sweet Hopium. So this is Raoul Pal comparing the 2013 Bitcoin cycle, which was one of the most aggressive, or the most aggressive that we had. with this cycle. And you can see that, it looked like we'd lost the correlation, but with that 35% jump, which we've seen in the last 4 days from Bitcoin, we're almost back to correlated. And hey, if we follow this, then we're capping out at 256 by the end of the year. So it's going to mean that we're going to get a hell of a move, but it's nice to see that we're regaining that correlation, and just never write off what Bitcoin can do. This is also really, really cool, which is even stronger correlation, and this is Ethereum on this bull run versus Bitcoin on the last bull run. So we know that Bitcoin topped out at 19,683. Well, look at Ethereum on this run. If Ethereum does the same as continues this and does the same as what Bitcoin did on the last cycle, then hey, March 2022, we're going to have $19,000 Ethereum. And of course, this is just nice speculation. But with the tokenomics of Ethereum, with EIP 1559 happening in a week today, I wouldn't bet against $20,000 Ethereum happening over the next 12 months, to be honest. This is crypto. Mad things happen. God, I've got my Hopium hat on today. This is a nice cool one as well. Let's just quickly click on this one. Do bear with me. All right. It doesn't want to do it. Here's another one that Jordan Lindsay from Conquer Trading and Investing put out there. So he's got this most important trend line in crypto, which I'll show you on the charts very quickly. And you can see that, potentially we're about to explode as we cross this. Then in past cycles, we've had this downward move, bang. And so every other cycle has had this very similar phase. And we're just about to end it. And then after we ended it, this happened the last 2 times. So pretty exciting, isn't it? And this is quite nice always to look at the old rainbow price chart, and you can see past cycle. So there's that dip down. Here's that dip down, I guess. And here we are now. So it's looking pretty juicy out there. That doesn't want to load, so let's jump into the charts. I don't really want the 5-minute chart Bitcoin. Let's take it onto the 1-day candle chart. Okay, so you can see that we are, we're coming into that heavy resistance at 40,000. It's where we bumped our head here, and we already tested it 2 days ago now. And we saw selling come back down. I'm going to take this to the 8-hour chart because it's just going to give us a bit more clarity. But one lesson, if you're not familiar with it, you don't have to be a trader to know this, but you should never buy at resistance. You should either wait for resistance to be broken or buy at support. So, you could say we had that retest, we came back down here, and you can see we retested and found support where we had previous resistance. Resistance always turns to support and vice versa. So that's, when we come down and test it, that's when to lean in, buy when others are fearful. There's no point buying here below this line. What you need is the break, the retest, and the resumption up. So you'd be much better off buying at 41 or 42,000 than you would be buying at 39,000. And I know that sounds counterintuitive, and it is counterintuitive if you're looking to hold for the next 5-10 years. But if you want to potentially get a better price, I would prefer to buy once resistance is broken or buy on a retest of support personally. So I don't necessarily think we're going to come back and have another test of 30 unless a massive strong announcement comes out from the SEC tomorrow or today, but I don't quite see that happening. So yeah, I mean, if we look at this very aggressive trend line which we have in play now, we're a little extended above it. I wouldn't be surprised if we come back and test this, perhaps at this resistance here, which would coincide with here. So jump in at 38.5 or so, but don't necessarily buy whilst we're just kind of under this. Okay, and just having a quick look at Ethereum and where we're at there. So in the same way that 40,000 is the resistance for Bitcoin, 2,400 is the equivalent resistance for Ethereum. And so we're much the same. kind of coiling underneath here. As and when we do break it, and it's probably going to happen, we have some light resistance coming in at 26.30, but basically this is just a big nice air pocket where we can expect a good move straight up here to 2900. I can't see that taking more than a few days as and when we break here, so that should be nice to see. So yeah, you can see that light resistance here. That's where we'll have a little stutter. Maybe we come back down, retest this as support, confirm resistance as support, and then move up. But yes, looking rather healthy, rather nice. So wait for the break before you buy. All right, I think that is enough for now. Goodness me, we've already done 11 minutes. If you did get any value and you're here to the end, thank you for being a loyal listener. And do please smash the like button, subscribe, and click the alerts and all that jazz. All right, till the next time, happy investing. Speak soon. Bye.